The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. Well, I was going to continue on with what Basil was talking about with the young lady he was speaking with about the new building, highest skyscraper in the world going up in China. And I happened to be in Guangzhou, China in 2003 when the SARS epidemic broke out. It was that weekend, and I didn't know what was going on. Nobody else did either, but I was able to get out of the city without even any problem. If I'd have waited an extra couple of days, I'd have probably been stuck there for a couple of months. But I was able to get out of there. But the reason why I bring this up is that at that time they had opened about 6 months earlier the largest shopping center in the world. It's twice as big as the Mall of America in Minneapolis. And if you've ever been there, that thing is absolutely huge. But the one in China, in Guangzhou, has 3 McDonald's in it, one on each end and one in the middle. That's how big it is. And it is 4 stories high. It has an amusement park at both ends. And the most ironic part of this is that I was there in 2006, and it was still empty. There wasn't 10% of the stores, were filled. I mean, it basically was an empty building. And as from friends that I know that go there, it's still pretty much empty. There's very few people in it. But it does have 3 McDonald's, and that's the important thing, one in the middle and one on the end, and one on each end. So that's, something to keep in mind. Just because some things are bigger, that doesn't mean that they're going to be better. The other question that Basil was talking about was stochastics, and the man who made them popular was a man named George Lane. He was a physician, an MD, actually retired MD living in Chicago, and had quite a few friends that were on the floor of the exchange, and he was the one that made stochastics popular. However, he learned them from a man named Ralph Distant. That's D-Y-S-T-A-N-T, who was a disciple of Ralph Elliott, of Elliott Wave fame. And Distant was the man who really discovered what stochastics were and how they worked. And the stochastics come from a Greek word that means skill at timing, as I recall. Anyway, I did not attend, but Twentyman was working with me when I was at Drexel in the mid-'70s. And George Lane was putting on seminars, and I sent Jim. Actually, Jim worked for me, but we worked together. So Jim went to Chicago to spend 5 days of live trading with George Lane, and George would come out in the morning for about 15 minutes, give a little talk for about 5 or 10 minutes, then wouldn't show up for lunch. Would show up for lunch, give another 5-minute talk, and then he would close with another 5-minute talk. At the end of the day, he would always point out that when the stochastics were down, of course this was all in past tense. He said this is where you buy, and then when stochastics were up, he said this is where you sell. Well, that was $10,000 for a week, and didn't learn much out of it. But that's how things were going then. That was not out of my pocket, by the way. Drexel paid for everything because I had an educational fund, based on my trading performance, and we always seemed to do okay, so it was not a big deal. But it was really, really a real experience. And that brings us to the point is just because, someone teaches and doesn't trade, that really doesn't mean much, because if you can learn something from that person, it's very important. There are a lot of traders, that don't teach, and there are a lot of, teachers that don't trade, and that they are not really related at all, because trading is related to a personal thing, and some people that just don't have the I don't know what it would be. I guess it would be mental discipline or whatever, or the stick-to-itiveness to learn trading. But just because someone doesn't trade, does not mean that they don't know something that you can't learn from, because that's the main thing. So that's the end of that thing that I'm trying to talk about. I was going through some old material tomorrow on the commodity show. I found some stuff from 25 years ago when I first started working with the patterns, with the butterfly. I've been working with Gartley's for more than 35 years, but I found some things on the extensions and stuff that is really interesting. I hadn't found this stuff. I was looking for a piece of paper that I needed, and I found these old sheets. I'll bring these to your attention tomorrow during the commodity show because they are very, very interesting. I just couldn't believe that I'd lost them for that long period of time. Now, I posted into Tiger TV a trading philosophy that Mark Douglas and I had worked on more than 25 years ago when I first met Mark, and it's basically the foundation of any trading philosophy has to be risk control because you really don't know what the heck's going to happen. Nobody does either. For instance, this morning, the stock market looked really weak, and then in the last hour, it's gone up and it's taken out the overnight highs. That really doesn't mean very much, folks. That's just the normal flutter of the market. Now, if it were to continue higher today, and go a great deal higher, then that could be a reversal of some time. But it'd have to get above 1420 in order to to really say that this is a big key reversal day. But what's happened now is not really very much. I've seen several times in my trading career where the market would be down several hundred points in the Dow, rally back to unchanged, and then go down and make new lows on the day. We haven't had volatility like that in a long time, but we're probably going to start seeing it relatively soon. That's what my guess is. So that's what we want to keep our mind in what we're doing here. Now, I want to talk about the Chinese market because we talked about it yesterday, and it's very important where we are. Last night's low came in at 1959, and that was right down in the area. We were looking at 15950 area, and it reversed and closed above 2040, so it moved a little more than 4% from low to high, and so that has completed that pattern, and the cycles that are there have also held up relatively well. So that's a very low risk opportunity. And remember that the Chinese stock market can go up, and our market can go down because they're different. Remember, ours went straight up, while theirs was going straight down. So that's the main thing. But the bigger picture with the Chinese market is the one that I think that we really need to pay attention to because it is a perfect Fibonacci, pattern recognition type pattern that's occurring in the Chinese Shanghai Composite Index. The high from the January 08 to the January 09 was exactly 0.618, and then it came down to an exactly 0.618 into July of 2010, and then it rallied up into December of 2010 to the 618 retracement of the actually it was the January high, and then we came down to where we are now, making an ABCD 1.618 expansion at the 786 level at this 19.50 area. So this is a really strong probability of this Chinese market for Shanghai, bottoming in here. We'll keep following this, much like we did with Apple when we look at some of these things. So this is what we're looking at as far as the pattern. It's nothing more than a pattern. That's all it is. Now, I had a question, how do I isolate myself from the news? And I know it's difficult, but frankly, when I start trading in the morning, I put on Bloomberg just to see that, the end of the world hasn't happened. No one's been overthrown, a dictatorship, or there's been a currency devaluation, anything like that. I want to make sure that that's has not happened. And then from there, I just, go in and start, looking at the charts that I'm preparing to trade, for the day, and I'm looking at about 16 to 20 different things. Most of them, 95% of everything I do is in forex and in futures, and that's pretty much, what we're doing when we're trying to, figure some of these things out as we look at the markets, each day. Now, one of the markets that we've been following closely has been the price of, Newmont mining. And, we've had a pretty good sell-off, in the gold market today. And in fact, we'll cover that, when we come to the break. But what we want to do now is take a look at Newmont because it had, basically has a potential for a triple bottom in this area. It needs to hold that 45 level, very, very strongly. It's at 44.50 right now. So if it fails, that means that, we're looking at something that could be quite sinister in gold. But really what's happened now is that we just took out the low of, a week or so ago by just a few cents. And, we want to watch it very, very closely. Gold's had a little bit of a rally here of about $8 or $10 recently, in the last, 30 minutes or so. But here again, that really doesn't mean a whole lot because all it did was just make a retracement from the 786 of the last move. So those are the little things that I'm looking at as far as the gold market goes. It's very important that we look at the gold market on a little bit bigger time frame here. I'm going to bring it up here and show you what we're watching for gold, because today is something that we've been watching incredibly a lot. That's not incredibly a lot, but it gives a really good idea of how some of these markets, hit off of these numbers. And our good friend, Mr. Zitow in the Tiger Den, pointed this out earlier this morning. He gave me a call. We were looking at the same price, which was at that 1688 level. And I posted it into Tiger TV, and you can see that low today was exactly that. Now, whether that's going to be the exact low for the day or not, or for this move, we're really not sure. But all we know now is that the risk here, is extremely small. You only have to risk a few dollars when you realize that the gold contract is for $169,000, and you're only risking a couple hundred. That's an ideal, risk-reward scenario if you're looking at this. So the question that someone asked me on the gold, on the longer term trend that we have for gold, we at a real critical level here, folks, because we've had we're right at that 786. You'll see it on the daily chart, a lot better when you take a look at this, because we had the the triple bottom in gold from last year through September, December, and then into May. Then we had the 5 higher bottoms that occurred, and we were on those. I mean, we watched every one of those form as they were happening, and now we're at a really critical level, because today's low was the 786 of the low from back in late October. And if that doesn't hold, folks, we're looking at a huge move down in gold that would take us to all the way down to the level of about 1625. So it would be more than $70 away from here if this 786 does not hold. So that's why the importance of this day is, or that of this price is so extremely important, of around the 1688 level. It's extremely important. The same thing is true of silver. Silver's had the big sell-off, coming off of the 786 retracement, and that's another one that is, making its move right now, and it's trading right about the 50% level of that previous move that we had from late November to where we are now. Now, remember now that gold is at the 786 retracement of that low in October, but silver is only at the 50% retracement. And we've been saying all along that this is a potentially bullish thing for silver.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks, and I'm going to change the format here a little bit. I'm going to put these patterns in that I was going to put in tomorrow. I'm going to put them in for tomorrow's show, too. But I want to put them in today because I think they're very interesting to me, so they should be interesting to you. These are the original patterns that I worked on before I had the butterfly pattern. I'm going back, to 1988, 1989 era. This was the Bryce Gilmore era. The butterfly pattern came from this. This is how I finally, found the butterfly pattern with the help of Bryce Gilmore. But these patterns that are here will show you how the extensions happen and how the retracements happen, of whether they're 618 or 786 or 1.27 or 1.618. These two diagrams that I'm putting into the Tiger TV are the exact ones that I still use to this day. However, I do have the butterfly pattern, and, I've always had the Gartley and the three-drive pattern, but these are the numbers that show you why I only use, the four ratios of 618 and 786 for contracting ratios and 1.27 and 1.618, for expanding ratios. That's the real beauty of these old charts, because this is where I, learned to do these things. And they're worth the price of admission. So if you get a chance to go into Tiger TV, take a look at these two charts, because there's a total of 6 on each one, buys and sells. But this is the original work. This goes back, just about 25 years ago that, I learned to put all these things together. I'd had the Gartley since 1975, but these others I didn't really get until I met with Bryce Gilmore, who was able to explain to me, the total part of the geometry of the markets, because Bryce Gilmore has no equal. I mean, I don't care who you want to talk to, any Gann person or Elliott Wave person or George Baer person or whatever. No one can do what, Bryce Gilmore did. I mean, he did, and as far as trading, he wasn't that great a trader, but boy, could he do the analysis. I can honestly say, and I've known Bryce for many, many years, I never had a losing day when he was in my office working with me, because, first of all, I was on my toes because I knew I was in the presence of genius, and I was learning so much, just being around him, that I was able to, be able to function a little better just because of that. Now, the fun part about this, I mean, I had a lot of losing trades each day, of course. I mean, but I didn't have a losing day. In other words, at the end of the day, I would come up and, still be profitable, because when he was there, I did a lot of work, and I was watching him do, what you were doing, and that's about it. Bryce basically is retired now. He's lost his eyesight pretty much because of a couple of auto accidents that he's had, and he fishes a lot. He trades in the morning. His wife, Helen, helps him, to tell him where the patterns are, and he puts on a trade or two in the morning and, supports himself pretty nicely with that. But he fishes just about every day. He doesn't play golf anymore, but the man is, without a doubt, a true genius, and I thank God that, I was able to meet him. Someone in the den just mentioned about the California Trading House, and that is a legend. I don't know if many people ever got the chance to go there, but it was in Pismo Beach overlooking the Pacific Ocean, and it was quite a large house, and 20 men lived there on the top floor, and then the second floor was for our guests. The third floor, which was the bottom floor, was where we had the trading floor, which was about 2,500 square feet of nothing but charts and desks, and Mark Douglas would come, and quite a few floor traders from Chicago and New York, and then we also had Bryce coming out, and Bryce would spend 2 or 3 months every year at least, there in California, with me, and we had a wonderful time, not just trading, but learning and meeting a lot of friends and stuff. But that was a long time ago. As a matter of fact, as a real treat, I don't know if this is going to come up or not, but while I was going through this stuff, I have a picture here of Mr. Twentyman and myself from I believe this is 1989, and we were both in Pismo Beach. I sent it to Jim last night, and he said it doesn't look too much different, except that we're a lot older and we don't have any hair. So, but anyway, that was a picture of us, years ago when we were in the trading room, and we had a great deal of fun there. It really was, and it just brings back a lot of really good memories. Okay, let's get back to the markets, because this is why we're here. We want to take a look at the stock market, because, we've had this pretty big move. We've broken down below the 1,400 level. I know we snapped back today, but that really doesn't mean very much. Got to take a break, 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks. If you have any questions, the number is 877-927-6648. And I put into Tiger TV the picture of the E-mini S&P, the fact that we went up and we hit that 61% retracement up at that $1,424 level on Sunday. And we've come down. Today's low was an exact 61% retracement coming off of the lunar eclipse and full moon that we had at that point. And if we take off and get above 1424, folks, that means that low that came in on that lunar eclipse was a very, very important low, and this market will go higher. So 1424 is what we're looking at as far as, where we stand. All we've done so far today from Monday, and then we're talking just about 3 days, 3rd, 4th, 5th, is that we came down and made a 61% retracement off of the lunar eclipse and full moon of the 28th of November. That came in at 1398, and then the market has quickly rallied back and hit a 61% retracement at 1414. Now, if we get above 1420, there's a really good, strong probability that this thing would be getting ready to, move to the upside, and then we would, say this is not going to work, the way that we think it's going to work. It's just a series of numbers. That's all it is. They don't always work, the way we want them to, but, this is what we're watching. We've had these, quick snapback rallies before, and they fail. But if they don't fail, and this one has the potential of failing because of the fact that it did make that 61% retracement, from the November 28th low. So that's the important thing to look at. So if we get above 1420, my guess is that this cycle that I'm looking at is not correct. And the way this came out of here so quickly, I mean, we moved, just in a matter of, 3 hours, we moved, well over 14 or 15 points in the S&P, and it takes a lot, for the market to do that. And it's doing it, in the face of, Apple, doing, very, very poorly, which pulls down the NASDAQ. And we should take a look at the NASDAQ, on the 30-minute chart just to see what, number we're looking at there, because, we're looking at the same type of pattern. It's just that it's a different market because of the makeup of the way they do it. And I will put this into Tiger TV, and you'll see that the NASDAQ has rallied, not even to the 50% level as of yet. And, whether that's going to be a factor or not, we don't know for sure. All I'm doing is watching, one step at a time, to see where to see what we're looking at. The question came up about the, about the gold. And, we've been watching this number to come down. It stopped right at the 786 at 1688. That's all we know for now. I mean, it's only rallied to us, $7-8 from that low. Maybe it'll turn into a bigger move like what we've had in the S&P, but we don't know that yet. That's why if you look at that trading philosophy thing that I posted into the Tiger TV today, it basically shows, the whole thing on the basis of your trading activity has to be based on the amount of money that you have at risk, because that's the only thing that we can control, folks. We don't know what's going to happen next. Nobody knows that. And we also don't know how much money we're going to make on a trade. No one knows that either. So the only thing we can control in the risk-reward equation is the fact that, we have to control the risk, and that's what we work on. This is what, Basil talks about. It's what Tom talks about. It's what Steve Rhodes talks about, and Daryl talks about this. All of this is based on risk control, because everything we're doing is related to probabilities. That's the whole thing of, what we're looking for. So, given all those things that we're looking at, this is the situation that we have today. It really doesn't mean very much unless we get above 1420 in the S&P 500, and we'll take a look at the Dow Jones, because that's another one that the folks watch quite a bit. In fact, that's the one that most people follow more than they do most anything else. And you'll see that we're not even approaching the 61% retracement in that. The Dow has to get above. Let's just put that in here. The Dow has to get above 13,216. So the Dow has to move another 50 points higher in order to, to make this thing a breakout. And I believe that's the same number that Basil was talking about, around 13,220 or something. That would be the same thing that I would be looking at, that this could be a potential, for a failure if this, in fact, works that way. But it's still way too early. I mean, this is, early in the day. We've still got another 3 hours of trading, and plenty of time for the market to, go back up and go back down again. I mean, it does this, more often than not. We've had very little volatility recently, which is, that's going to change. And I think the volume is going to start picking up again. But, volume has been so bad recently that it's very difficult, for a lot of people to, see some of these shorter-term swings that we're looking at, intraday, because we look at hourly and 30-minute charts in order to, keep our risk down. When I first started trading, folks, I used a ticker tape. I mean, like you see in the old movies, and everybody used those, because we got our information from the CME and the Chicago Board of Trade via ticker tape. It would come through. You had your own rolls, and you filled it every morning. The rolls would go into a basket, and at the end of the day, you emptied the basket, and then you put it into a big trash bin, and that's how you got your material. If you wanted charts, you had to do them by hand. You actually literally had to post your charts by hand. It wasn't until the early 80s that they came out with the computer-generated charts that you were able to to see those. There's a really funny story that I have to tell you here. When I was at Drexel, this was going back in 1976, and we had Quotron monitors. You folks don't even know what they are. It was just basically like a little TV screen, about maybe 14 inches, and you would have all your commodities listed there. It would show you the prices going up and down in your stocks. And in the lower right-hand corner was time, T-I-M-E. It was listed just like all the stocks, but what it was the time of the day. And more than once, many times, people would come in and say, wow, look at this one. It just keeps going up. And it was time. I mean, it would go up till 12 o'clock, and then it would start going down. So I had a really good trading scenario. I would go long into noon, and in the afternoon I would go short, and it would go down. Boy, what a great trading vehicle it was. Unfortunately, you weren't able to trade it. But anyway, I guess I'm getting too nostalgic in my old age, but that's one. Hey, this is why I remember some of these old things about George Lane and Ralph Distant and some of these things. There's very few of us that are around that had anything to do with those people. I mean, I remember them. I remember working with Larry Williams back in 1966 when he had commodity timing with Michelle Noseworthy. And, Larry's been around. We're the same age. We've been around the same amount of years, and, we've been friends for many, many years. So this is, this is a few of the things. Remember, many of you folks don't realize it, but Larry's daughter, Michelle, who was born in Kalispell, Montana, in the early 80s, she was, she's a movie star. She's been up for several Academy Awards. She was in Brokeback Mountain, and she did the movie with Marilyn Monroe and a whole bunch of others. But she's a very nice girl. I can remember her holding her when she was just a little tiny baby when I visited Larry up in Kalispell once. So it's been a long time ago, but those are the memories that you have as you go through this. So, someone just asked me via the Dan on a private message, what is my most memorable memory of working at Drexel, Burnham, Lambert, and frankly, there's so many of them. I am going to write an autobiography. I'm keeping notes. I have for many, many years, and as I get a little bit older, I'm getting old enough now, but I'm going to put it all together. But one of my favorites was in 1978. We were at a board of directors meeting at Drexel Burnham in Las Vegas, Nevada, and they had some great entertainment there because of Mike Milken. This wasn't the Predators Ball. This was a regular directors meeting, and I was sitting with my boss, and the speaker was Joe Granville. And they paid him a great deal of money at that time. I think it was $50,000. And Joe came out in his tuxedo and had this beautiful model, and she was carrying this incredibly expensive bottle of cognac. It was a Louis something or other, Louis Napolitano, whatever it was, one of those things. I don't drink, so. But anyway, he had the girl open it, and they let the cognac breathe. And while they were doing that, a little monkey came out with his Italian guy with his little glockenspiel, like his little accordion, and they were playing the song. A little monkey was running around with his little tin cup on the stage, and Joe took the little crystal glass of whiskey or whatever it was, and he saluted to everyone who didn't subscribe to the Granville Market Letter. And when he said that, my director, who was one of the big people at Drexel, looked over at me, and he said, short that SOB. He said, that's the high tick in Joe Granville. And many years later, and I'm still a friend of Joe's, I reminded him of that, and he said, that was my high tick. He said, I never got any bigger in the business than that particular night. And I believe it was 1978. I can't remember the year, but the circumstances behind it, were really, really amazing. So anyway, that's just a little nostalgia. We got to get back to the markets here. We're right at the 61% retracement now in the S&P 500 off of the high we made last Monday. We came back really strong, which is a very bad sign if you're short here, because if we get much above 1420, this is going to be wrong, and it'll probably turn and go higher. I'm not sure the reasons for it, but nobody else is either. But that's all I'm referring to is what we're looking at there. Okay, now the next thing I wanted to talk about was the Treasury bond market, because we have just completed today a really nice ABCD pattern in the Treasury bonds. Whether that had anything to do with whether the stock market was going anywhere or not, I'm not sure. But I'm going to put into the Tiger TV, to show you the pattern that we had forming in the Treasury bonds this morning, because it went right up to the 1.27 expansion, up at the 150.21 level. And that's when the stock market was bottoming, is when that pattern, the T-bonds, were being hit. Longer term, the bonds still look good. There was an interesting article on Bloomberg this morning when I first got up that the yields on the Spanish bonds, and Spanish bonds are really, dirt quality. They're, I think they might even be lower than dirt. I'm not sure, but they have reached the lowest yield in 1 year. In other words, they're able to borrow money at a cheaper price than they have in any other year. So that's the main thing that you have to keep in mind. Someone else asked another question here about our SDS that we were looking, that we were buying at the 56.40 level, I believe. We got up to 56.76 today. And I'll put this into Tiger TV, and you'll see that this is the double short, ultra short of the ES, which is good. And today's high was, and it's very similar to what we've done and everything else. Today's high was an exact 61% retracement, and what we're doing now is we're making another 61% retracement, and that's the equivalent to what we're looking at 1414 in the E-mini S&P. So if it breaks through, 16, that tells us we're, heading up to the 786. But at any, like we mentioned in this, you don't have to risk more than 1.5 points. So your stop would be below, 54.50 or so in the SDS. That would be, just about, well, it'd be, that would be 2 points, excuse me. So, that's what we're doing. I'm not sure, and no one else knows either, is whether this turn is coming the way we want to see it or not. All I know is that everything is there for it to work. Whether it works that way or not, no one knows, nor do I. And so that's the only thing you can do, is to, use your risk evaluation as, how you want to handle this. I watched the SDS options when they, when the SDS was ready to be bought, because if you bought the call option, you didn't really have a, I don't even know where they're trading. The last time I checked, they were like $1.10 or something like that. I don't even remember. But we bought those at $1.50, and so that was our risk. And we have till January, to see if those work. Well, if they get above 1420 today in the S&P, my assumption is that we will probably just, bite the bullet in those options and just take our loss and, look at something else, because there's a lot of other things that are available out there to see what, what's pretty good. One other person just asked a question, and the reason why I say this is they drop me instant messages from the Tiger Den, and they private messages, and they ask, it's going to be hard for stocks to go down because of banks. Hey, we're going to take a little break here. We'll get back. We'll take a look at the bank stocks. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I wanted to mention that, we have Basil's webinars Thursday and Friday, and, if you have anybody in your family that wants to learn stuff, you don't get a professional like this to do a 2-day webinar. I mean, they'd have to pull my teeth to get me to do 2 days, but, he's given 2 full days. That's really terrific. So, and the information that he has is amazing. Now, what I wanted to talk about was the banking index, because, we had a, really nice move on the today's low in the banking index was a perfect 61% retracement, and we've had a pretty good rally from that. But the next one that I wanted to talk about and finish the show up is IBM, because it's one of the big stocks in the market, and something big has happened to IBM, folks. We talked about the potential of the double top way back in October, but what happened after that, and we've mentioned it once or twice, since that time, but what's happened now is that we had this huge gap that occurred way back, on October the 17th, something happened that day. Somebody at IBM, they made a decision of some kind, or something happened to one of their products, because when you leave a big gap like that, something really serious happened. Now, they're not going to tell us. They're never going to tell us, but all we can do is look at the price. If prices are going down like that, that is not a very good sign. And remember, the rest of the market continued on up at that point, and, IBM started down. So this is the same situation that we've had in other stocks, like Apple. Do you remember when Apple left that big island reversal up there at that 694 per share, and all the information was coming out that how wonderful Apple is. I mean, anybody that doesn't think Apple is wonderful doesn't have a TV or a radio or walk through or take a bus or anything. Everybody's got an iPad, but these things are related to how people view things. If you remember the movie, Wall Street, when Gordon Gekko tells to Bud Fox, he said, it's not a question of where things are, it's the perception of where things are. And that's really what you're doing when you're looking at this. And when you see a chart that has a gap, a big gap, and you don't know anything about the news, just remember that somebody a lot smarter than you in the company knows a lot more than you. Somebody caused this selling. And we all know, just by listening to what's happening on the news, that there's a lot of, insider information, being leaked out in the pharmaceutical business and technicals and stuff. And, these guys are getting sued back and forth. This has been going on, forever, ever since we've had stocks. If you've read anything in the history of Jesse Livermore or George Cole or, Bernard Baruch, any of these people, insider information has always been, one of the reasons that, people do things. Whether they're right or not, I don't know. Frankly, I have never gotten a tip that worked. Every tip that I ever got didn't work. All I had to do was do the opposite thing, and I would have been, far better. I'll end the show with one other story of Drexel, and I very seldom traded stocks when I was at Drexel. We have a situation. I think we're running out of time. Well, anyway, we'll try to cover this at another
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.